Good morning. I'm Vince Lancy, and in today's market rundown, we're going to go through a Bank of America and Goldman Sachs CTA report that gives us an indication of market sentiment, that gives us an indication of what investors or traders are more apt to do over the next coming weeks, and gives us a feel for what part of the cycle we are in and seasonal part of the year we are in. It's actually indispensable in determining your own bias going forward for the next few months. At the very least, it's going to help you manage your own expectations. When the market goes down, you're going to know why it's going down after this conversation. If the market goes up, you're going to know why it's going to go up, and you're probably going to giggle your ass off after you listen to this. All right, we'll explore some of that as well for everyone. Okay, let's start with the markets. The dollar is down 9, 10-year yields are down 1, SP 500 is up 26 at 51.99. The VIX is 27.85, basically unchanged. Gold strong and getting stronger, up $25 at 24.09. Home on the range is what I would call that as, up 1% actually. Silver 26.97, up 36 cents, up 1.35%. Copper up 73 basis points, 395. That little snapshot there, you want to see that. You want to see copper good. You want to see silver better. And I know that you're saying, oh, well, it's really not up as much as it normally is when gold is up. We're just getting started if it's going to go up. Don't sweat it. I'm not saying it's going to go up. I'm just saying we're just getting started. This market is just, silver's a monster in hibernation. WTI is down 12 cents, continuing to get bludgeoned, 75.81. Natural gas is 205, hovering around the figure. Bitcoin is 57,577, up 2,400, which is pretty impressive. Still at the lower end of a range after a massive sell-off. Germany must be pretty happy now, having sold those bitcoins last month. They must be feeling pretty proud of themselves. Ethereum is 2451, up 108. That's also 4.5%. Interesting. I wonder why all this is happening in crypto compared to, say, stocks. Maybe it's catching up. Platinum and palladium are mixed. Palladium is up 10, 891. Platinum is down 1 at 918, which seems contrary considering that everyone's worried about a recession now. 890, 918 are the prices. Grains are mixed. Wheat is up 2 at 554 and change. Soybean is down 2 at 1045, and corn is down 1 at 383.70. You're looking at a silver chart there. I'm adding some lines on silver now, and because we're getting to that time of year where lines matter for silver. All right, see this area here between these two little lines? You could draw your trend lines on top of this. And if you see an intersection with one of my lines in your trend line or whatever other instrument you use, it might be very triggerous, so to speak. So in this area between here and here, that's what I would call a dead zone. Avoid it. Between here and here, this is a trading range. However, if we get above this line, I would not expect the market to chop around. I would expect to gravitationally reverse and get pulled up very quickly to here. Why? It's skated down, it's skated down, there's a lot of volatility in here. But this time, because it's worked its way down here 3 times, I think you would have a rally stronger. Now, I'm not predicting it. I'm just saying, don't be surprised if we get in here and the market just whips higher. But I will be more predictive of that if we take longer to get in there, because I want to see more CTA shorts get in the market, which we're going to cover today. Here's a trading range above. I don't really have a strong feel for that yet, but there you have it. Gold, quick look at gold. Gold's pretty simple now, right? This is where going way back to that story I told you, which is true. This is where a central bank and sovereign wealth fund bought. This is where they may have bought again. This is where somebody is buying in here. I don't know who it is, but I'm going to think it's at least one of these guys. Anyway, you got to be nuts to sell gold. you've got to be so plugged into the market or so idiotic to be short gold between now and the election. There are only longs who will sell. There are no shorts who will get in who are in their right mind. Or maybe they are in the right mind. We just don't know who they are yet. They're just really that smart. All right. Here's the site. We're having rendering problems, it seems. So there you go. There's the Kyle Bass conversation that he spoke about the yen trade the other day. Kind of tied it in with Yellen. Special negative gamma hurts banks now. That's for founders. And here's the Tom Luongo uncensored interview that, was kind of fun to do. All right. Moving on to the title at hand. All right. Today we're going to, I could name this so many things. The CTA pathway to hell begins. The season of getting chopped up is starting. Keep your powder dry. CTAs are stupid lemmings and they're going to lose money. But that's not true. We'll get into that. I wish it were true. It's just not. So the commentary will be CTA seasonality and the premium. We're going to go through the Goldman CTA report in a little more detail at the bottom, at the end. So let's get started. Bank of America says outside of gold, CTA commodity shorts are increasing, except for a relatively large gold long. CTA position in commodities is quite short. Next week, trend followers could be increasing shorts in oil, aluminum, silver, copper, and gold. Copper and soybean oil. Did I say gold? Sorry, this is what's on my mind. That statement there, what they're saying is that anything that's economic, CTAs are selling. They're worried about recession. And anything that's gold, which is only gold, they're holding, right? And so they will sell gold as time goes on. In fact, they probably did sell gold over the last 3 days. This is about 5 trading days old. So over those last 5 trading days, they definitely sold gold, but they did not get short gold. They're getting short silver now. They're getting short copper now. They're getting short oil now, which, as we know, unless we have a big trending market, which we're not, at least not lower, those are launch pads for higher moves, rocket fuel, jet fuel, however you want to call it. But again, this is the season of chop. There's the Bank of America flow chart. Those little colored lines on the end, there's little nubs. That shows there's not a lot of new money coming into gold this time of year. That's your takeaway from that chart. Moving on to the Goldman one, which is a lot more graphic. You see 4 charts there, right? The first 2 from left to right, that's what CTAs invested in the market before a month ago and at the end of the month, right? And so what you'll see from this chart is that they've reduced their energy longs. They're actually probably short now, okay? They've reduced their base metals longs. They're definitely short now. And they've reduced their precious metals longs. Now, in this chart, they've increased them, but I know they've reduced them now. Okay, they've increased by buying gold, but now they're selling silver to get short, and we'll show evidence of that in a second. The bottom 2 charts, the left chart is for commodities in general. We'll discuss that some other time. I've gone through those before. This is by sector, right? Pay attention to the star, right? Precious metals, they're net long. Okay, base metals, they're net short. Okay, energy, they're now net short. Precious metals, they're net long. I'm telling you that they're net short now, meaning they're long gold, but they're not long silver. I can just feel it. Let's stay on this. I'm going to go through this in a lot more detail at bottom. What do I want to say about this right now? Well, I want to say that over the last month, after the mid-year comes and goes, CTAs don't have more money to allocate after August 1st. And so there are 3 types of traders this time of year. And CTAs matter because they're indicative of what other funds do, if not always predictive. So the first type of CTA trader, which is also the first type of fund in general, will leave things as they are. And those ones are very rare. The second type will start to chase trends that it thinks are emerging. And 9 times out of 10, no trends emerge between August and October unless the Fed is doing something. Now, they could do something. The last time this happened was when they started hiking. The third type just starts to close everything. So positions that are being built up between, say, July 1st and August 30th, right? 31st, end of the month, whatever, end of August. Those trends, those positions tend to be unwound between August and October at the CTA side. So if I'm telling you a month from now, the CTAs will be short base metals, they'll be short energy, and they'll be short silver but long gold, you should think that's probably going to happen. And if that is the position that they all have a month from now, then know that they're maxed on their positions and they have no money left to put in. And now they're just watching the ball spin around the roulette wheel, hoping it lands on black or red or whatever. Okay, so right now they're putting positions on that are unsustainable. That's what I want you to think about. Okay, and we're going to discuss this more at length in the premium section at bottom. But the short version is this: is be patient for the next month. Be happy if we break out higher, but be patient and know that if the market starts selling off, that's from lemmings jumping off of a cliff again, and people worried about the economy. This is a flow or behavioral type comment. All right. Politics and geopolitics. Everything is about Middle East now, and there's almost nothing coming out about Ukraine. Zelensky's not in the news at all. Now, that could be because he shouldn't be in the news. It could also be because something's going on. So I'm just going to say, put it on your radar. There's no news coming out about Ukraine right now, which is a sign that usually something is being planned or going on. It's when they don't talk. It's when the big mouths don't talk that you have to pay attention. Okay, just keep an eye on that. In the Middle East itself, look, Hezbollah, there's a lot more rhetoric going on now, but Hezbollah is going to strike Israel, right? Right, but Iran's not going to strike with them because they don't want a full-blown war. Iran isn't. Geez, I don't think they are. Anyway, all right, so that's it. Data on deck today is wholesale inventories, and one of the Fed speakers is speaking. I think it's Barkin. I'm not sure. Tomorrow, nothing is scheduled. So after noon today, you may see the markets gyrate a lot and move a lot, but not on news. So you get a whatever's going on in Japan may reassert itself here. In the premium section, we're going to go over these things: seasonality, a little more detail. Chop season, no new money, musical chairs, catching trend hopes, usually not. And we're going to interpret more of the Goldman charts. So stay with us, but let's take a look back at gold on a shorter time frame. There we go. Okay. Look at the big picture here, right? Or look at the whole board here. The dollar's barely down. Nobody talks about the dollar correlation anymore. It'll come back, but not yet. The markets in general today are reflecting a situation where they believe the Fed's going to ease, but not as much as everyone is hoping. That's all this is. That's what this is showing you. I do believe that you're going to see the yen continue to strengthen over time, but they need it to be slow and orderly. Let's take a look at here. This will be fun for you. There's gold weekly. Is that something you want to be short? Look at these wicks. Can't believe that. Now let's compare it to the S&P 500 weekly. Okay? All right? So when the Fed cuts, the S&P 500 will rally, but so will gold. The S&P 500 may have 5%. It could rally with gold doing nothing. It really could. But gold is still doing better than the S&P 500. That's how it works. Back to gold, right? Now let's look at silver. What does silver look like? Silver looks like stocks, right? Why? Because people are selling silver to hedge their stock portfolios, and it never, ever, ever works. I can't wait for these guys to get short. Copper. Well, it looks like stocks, but even worse. That's China's money coming in. China's a metal coming on the market. Look at oil. Oil, right now it looks like stocks, but in general, it's in a trading range, right? By the way, this is the oil chart. You know what this looks like? Years ago, we used to say about gold. If you're trading gold, technicians would say, if you're trading gold, you're trading wedges. Well, if you're trading oil, you're trading wedges. Why is that relevant? Well, because when you start trading wedges in a market, that means it's not very dynamic. You're always waiting for it to break out of a narrower range. And believe me, oil will break out of a narrow range, but oil is now in the gold zone. It's being cooked lower. Okay, I'm Vince. Uh, I have nothing on. Maybe I should have something on. Tough call today. Well, I have a butterfly on. All right, I'm Vince. Have a great day. Stick with us for the premium section, which will be attached at the bottom.